Tom Hawley, welcome to Property Insights, mate.
Thanks for having me.
Of course, we do know each other. We know each other's. Oh, I know. You know my kids. Some of my kids, or probably all of my kids.
I do.
And you're around the same age as most of them. You're sort of a little bit older than most of them, but you're around about the same age as most of them at the same time. There's not much in it. And you are the co-founder and director of Azura Financial. What's Azura Financial doing, mate?
Mate, we're a brokerage. We're down in Double Bay, and we're
Brokerage what?
Mortgage brokerage.
Mortgage brokering boats?
Not brokering boats, mate. No, not to that level yet. But we're a mortgage brokerage, predominantly residential, so consumer loans, and servicing. Mainly I'd say eastern suburbs, lower North Shore, inner west. That would be sort of 80% of our loans, but we service nationwide. But we're a group of brokers down in Double Bay.
What's it take to be a co-founder or something like that, Tom? Like, so, what's it like to start? Where did you start?
Well, I started at a friend's brokerage, actually. He got me into it. Before that, I was in funds management and as an analyst, which basically just means, shit kicker, to put it lightly, straight out of uni. And a friend of mine was doing consumer lending or mortgages, I should say, and
that's Theo.
Kicking some goals. That's Theo, as I said to you
Theo
earlier.
Chambers. Hello, Theo. How you going, mate?
So Theo, thanks for getting me into it. As he knows, we used to spend a bit of time back at his place putting some presentations together when he was at Oxygen, and he got me into it.
He was at Oxygen, was he?
He was at Oxygen, exactly.
Because that was the one with John McGrath.
Yeah, exactly. That was that was McGrath's.
And Green, what's his name?
Yeah, James Green.
James Green.
He used to work with you back at our.
I fired James Green. Hello, James.
That's not what he says.
He said he left. No, I could tell the real story. But by the way, James is a bloody good broker. He understands broking very well.
Yeah, he's still in lending.
Is he? Okay, I didn't know that.
He's still at a lender, I think, at the moment, or he's definitely involved. I saw him the other day.
So you cut your teeth.
Cut my teeth there. Theo taught me, and an exceptional teacher, and they had a great business and learned a lot there, and was there for 3 years doing broking. And then my brother was in commercial lending at St. George. He came into the business at Shore, and then we ended up parting ways in 2016. Ben and I. Went down to Double Bay, got a serviced office, and started Azura, and started building it from there.
So do you have, in terms of, most people are always very interested in this sort of stuff, particularly the broking industry. When you start off, it's okay to start in a service office above the ground, like a level 1 or wherever it is.
Yeah, for sure.
And you don't have to have an address on the street.
No, I don't think so. We didn't need it. We built our business off the back of referral relationships. We didn't need a street presence. So
how do you run your business? So what's your business model? Do people come to see you now, or do you go to see them?
We do go to see them, or they can come and see us now. We've got an office where people can come and meet us, and we are happy to go and meet clients if they need us. A lot of it is actually done remotely these days. A lot of technology and all the
as in Zoom or something like that.
Exactly, yeah. It's all It's all able to be mostly facilitated remotely, and our business is based, almost solely off building business to business. Relationships with referral partners, whether it be real estate agents or accountants or financial planners. We do have some, B2C type lead generation.
As in retail type stuff. Yep.
No, I mean, we don't really have, walk off the street type stuff, but I generate a bit of inquiry through my social media presence. But other than that, it's all relationship and existing client referrals.
Can we explore that a little bit? Because I think that's important. I think if you're a broker, you've got to know how to do this stuff.
Yep.
And it's easier said than done. When you let's assume you already passed your sort of kickoff period and your startup period, and you've sort of you've got a bit of rhythm going, you and your brother, and let's just put commercial aside. Just talk about resi for the second.
Go for it.
How do you build relationships with, or who do you build relationships with first?
Well, I go through this a lot with my existing brokers, but when you think about broking, 75% of all loans in Australia or thereabouts are done with brokers. It's basically a staple type service that the community needs, right?
And expect. They understand.
And expect 100%. Yeah. And the community wants it, they demand it, and that's why 75% of all loans are done through brokers. And if you want to buy a property, unless you've won the lotto or you've come into money or your family's got money, you do need to borrow money, right? So we know that the community needs it. We know that 3/4 of people are going to use a broker. So then it's about just trying to be the best broker that you can be and trying to get in front of people. And the way that I sort of encourage our brokers to build referral relationships is have a structured plan in place. What do you take to the meeting? How are you going to communicate that you're a good broker in terms of your credit policy and your service and your process. But if you have extremely good credit knowledge and very good credit policy, and your process is good and robust and free of errors, and you've got good attention to detail, then it's very easy to be, considered a high quality broker. And you don't really need to be that good at sales, in my opinion. I think the service is what sells itself. I think people spend so much time trying to worry about the sales aspect, which you need to, but if you can really focus on having exceptional credit knowledge and process and policy understanding, and then getting in front of the right businesses who need to be able to send their clients to reliable brokers, then you'll have to focus less on the sales aspect. And it's about providing a reliable solution to an accountant or to a planner to say, look, if you've got someone that needs lending requirements, please send them to me. But this is another thing. This is probably a good point for people, and a really good lesson that I've learned over time is that things take time. You can't sort of go, I'm going to go and meet 3 referral partners and all of a sudden I've got referral relationships. No, you got to keep chipping, put a plan in place. I'm going to try and meet 2 new referral partners a week. What am I going to take to the meeting? What am I going to do after the meeting? And keep going consistently. It's not going to happen after 2 months. Might not even happen after 6 months, but you need to trust the process and understand that people need good brokers. So if you go out and meet enough people, you will get results. But I feel like a lot of brokers, and maybe you can, tell me if I'm wrong here, Mark, but a lot of brokers will say, okay, I know what I need to do. And they'll do it for a month or 2, and then they'll go, oh, I didn't get a referral partner. I'm not going to do it anymore. But you got to keep going. You just got to keep pushing.
That's very interesting. So, given there's I think 18,000 brokers out there, and as you said, they generate 75% of all mortgages going into the banking system in this country. And there's only one other country that's sort of similar to that, and that's the UK. It's probably even higher in the UK. It's pretty competitive when it comes to getting referral partners. What do you reckon your superpower is in terms of getting or convincing someone to put you in their consideration list of the broker they might deal with for their client? Could be an accountant dealing with his or her client. It could be a lawyer dealing with his or her client. It could be a real estate agent dealing with. What is it that you think is your superpower, and how is that? And is it repeatable?
100% repeatable. It's not a superpower at all. It's a bit of planning, and it's a professional approach, a lot more, than I think most brokers rely on that sort of friendly relationship, type approach, which has its place. People want to deal with people they want to work with and that they enjoy are working with. They like, of course. But when you're going to go meet an accountant, you got to understand he's probably had 5 brokers call him in the last week. Okay. So you got to take a bit of a different approach. Look, listen, I know you're busy. I don't want to waste any of your time. Okay. I've got a few things I'd like to tick off, tell you about who I am and what we do and how I can add value to your clients over and above just trying to help them with their loans. We can do rate reviews. I can come and meet with your clients if you need me to. And before you go to the meeting, maybe you send them an email about what you're going to cover in the meeting. When you're in the meeting, you have an agenda. Hi, look, thanks so much for your time. Again, very, very conscious of your time. This is what we're going to cover. This is how I think we can work together. And this is why we're different. And I'm not going to sit here and try and, again, waste much of your time. And then afterwards, maybe send them an email and then you keep them updated.
What do you update them with?
Market updates, interest rate. Macquarie's just cut their fixed rates. Bang, send a text merge out to all your accountants. Westpac's just increased their fixed rates, something to keep an eye on, send them something. Or, hey, this is a new policy that CBA has just released. Short, sharp piece of information that they might be interested in, and then give them a call and let them know, hey, look, I'm not sure if you saw that email yesterday. Again, not trying to waste too much of your time. Interesting policy just came out from CBA. So there's a very much this, it's going to take time to build that up, but over a not so long period, Mark, but these referral partners will notice, whoa, this broker's different. He came to my office. He had an agenda. He sent me an email afterwards. He sent me 4 updates in the last 2 months, and he's kept updated with me because I can guarantee you most brokers aren't out there doing that. So the point of difference isn't like some major monumental, secret. It's about really thinking about what are these, how do you expect an accountant or a financial planner to recognize that you're the broker that they want to work with? Well, show them that you're on a bit of another level. But how do you show them that? Well, you stay front of mind, give them valuable pieces of information, and have a very professional approach to how you operate.
And sometimes I refer to that as, you got to be competent. So you got to demonstrate your competency in your subject matter, which is, bank loans, or what are the bank requirements. But equally, you got to show value. You got to be competent plus valuable. And I quite like your idea of sending out an email with, alerts, lending alerts, whatever it's called. How do you get their attention? Because, the accountant or whoever it is, the lawyer might be getting 100 emails a day. Mostly it's these days reading emails is a bit of a grudge read, because it used to be fun and exciting, but these days, generally speaking, you're getting bad news. In most emails, it's a problem that you got to solve. If you're working in a professional environment, generally speaking, it's very rare people going, "Hey, going, what's happening, Tom? How's your brother, sister, whatever." It's more about, mate, you need to sort this out, or someone's pitching something to you. Yeah. So, how do you? What protocols? Well, what platforms do you use? Do you use WhatsApp? Do you ask them for the mobile phone? Do you ask them for their email address? If so, if it's just email address, why do you only do email address? So what protocols and why? Mm-hmm. And then how often do you hit them up?
I would say text messaging is a huge unutilized platform to contact your referral partners. But you got to be conscious as well, as you said, that people are getting communication left, right, and center. If you're going to bombard them with crap, mind my French, then forget about it. That you're going to be annoying. But I would say one valuable piece of information via text messaging enough, as well as an email. You could send the email and you could send the text to just say, hope you're well, Mark. Just by the way, I just shot you an interesting email about some policy, and I'll try and call you next week to discuss it. Have a great week. So people see an email and they go, CBF. But text messages people read, and it's not about bombarding them like a marketing exercise, like you're getting these marketing texts from God knows who. It's about sort of, again, being conscious of their time, understanding that they're unlikely to open the email, and then they sort of read it and go, okay, well, he sent me an email with some valuable information. He's now texted me to let me know, and he said he's going to call me next week. It gets me a bit, doesn't he? Because he knows I'm not going to read it. He knows that he needs to text me to remind me, and he's not going to annoy me. And that sort of all feeds into it. So I think.
Do you give them the option, Tom? I was just thinking about that as you were talking about. But do you give them the option to say, first text, just on the example we gave, first text, I've sent you an email. Second, then the second point in the text might be, I'll send you another text next week to remind you because I know you're busy. Then when you send the second text, you say, look, I don't know if you've read it or not, but if you have read it, could you just write back to me yes or no if you would like me to call you? Do you give them the option to call you back? Because they might say, oh, fuck, don't call me. I'm going to wipe that bit out what I said. They might say, I don't want to have to talk to the guy. I'm too busy. I'm I'm accountant. I'm doing all my clients' tax returns. I've just got too much going on. I've got head noise or whatever. I'd rather I can go and I don't want you to call me. So
100%.
As opposed to you just calling me, because that can be a bit of a pain in the neck.
That would be even another level again.
Well, doctors do
being conscious.
When doctors make an appointment for you, you make an appointment, and they've got some automatic software system that sends a text out to people. And says, you have an appointment on so and so, and it's your 10 a.m. on next Friday, and it gives you put in
confirm
a Y, and a Y, and YRN to say yes or no.
YRN, sorry.
I mean, do you ever do that sort of stuff? You ever thought about that?
I haven't, but I think that's even a
cool
more valuable thing again, because then they're sort of going, I don't want him to call, and he knows that I might not, so I don't want her to call or whatever, but. That all feeds into it again. But I think the emailing with the text messaging is valuable, and it's really a front of mind thing. And you got to keep in mind, they might see the email, they might not get the email. They might be sitting with a client when your text comes through. They might be sitting with a client when the email comes through, and then the text comes the next day. So you that's another thing you got to be conscious of. If you're sending these prompts to people, a lot of the time, because I understand, it happens to me personally. You'll be with a client, they'll say, I need a contact for so-and-so. And off the top of your head, you've got 5 people you could refer them to, but you just don't quite, which one's going to be best. And that would be the same with accountants and planners. they'll sort of go, well, which broker? And a lot of the time it's about just being front of mind. And if they can rely on you and they've just received your email or your text, you're the person that will pop into their head.
Do you guys sit on a platform, aggregators platform?
We aggregate through Connective.
You go through Connective, yeah.
We aggregate through Connective.
So how do you and your brokers, what's your process of keeping on top of, apart from being able to use the software, but how do you keep on top of loan features, loan changes? What's your sort of process and or your rhythm? Like, do you, every Monday morning, do you all get together and say, look, what's changed today or on the weekend, or what's the new fixed rate at Westpac or whatever? How do you do that?
Well, we have a very collaborative environment in our business. We've got 12 accredited loan writers, and they've got their own various teams, and we're all essentially in one office. So we're sharing information about rates. We get a bank in every week. Okay, so we get a bank in every Tuesday to come and talk to us. Any of the banks. Yep. Whether it's, it could be Suncorp, Bankwest, CBA, whoever.
You just call the BDM in.
Yep, we get the BDM in to come and tell us about their products, and that keeps the relationship.
What's that rhythm look like, Tom? Is that a Monday morning, or it doesn't matter?
Tuesday 11 o'clock.
Tuesday 11 o'clock. So everyone knows there's an appointment.
It's pretty regular. Yep. Every week we're getting a bank in. It might move here and there, but every week we're getting a bank in.
Yeah, that makes sense.
Sometimes it's 2 a week, and it could be a different, private lender or something like that. But we're getting lenders into the office, and because we give them value in terms of being able to see a lot of brokers at once. Not a lot, but
well, that's a lot.
12 brokers.
12. That's a lot of brokers at once in one shop.
So they they're happy to come, and we try and make it valuable for them by giving them putting a photo together and giving them some marketing as well, giving them some coverage, and that's one way we stay on top of it. But we're very conscious of sharing policy and process rates and everything in our business communication platforms, whether it be Microsoft Teams or whatever. And then when we have our broker meeting once a month or our company meeting, we have an agenda, and in that agenda is relevant policy or rate changes. And my personal team and my brother's team, we add to that, and we cover off any major changes that we think everyone should be aware of.
So your business, you guys moved into equipment finance yet? Have you doing any equipment?
We don't do equipment finance.
Are you doing commercial?
We do a bit of commercial, but it's a small piece of our.
Oh, so your brother's doing res, or he's running the business?
Brother's doing resi, yeah.
He's doing res,
yeah.
Okay.
We would be, our business would be, between 90-95% resi.
All res, okay, mostly res. And how you find the market? Like, how are you finding it at the moment? Because you're in Double Bay, but you're not just doing Double Bay. I mean, in fact, Double Bay loans are probably the hardest loans to do because they're usually large loans. So,
wouldn't be many around Double Bay.
And you got usually you got complicated trust structures and all sorts of things going on. But how are you finding the market with your borrower community? So give me a snapshot of your borrower community. What we're talking about, average loan, $1 million, $2 million. What are we looking at?
Something like that. Our average loan across the business is probably $1 million. Mine's probably a bit higher. It's probably closer to 1.5 in my team.
Yeah.
But it's I think there's people still out there who are active, but it is certainly
as in borrowers.
Borrowers, yeah. There's definitely volume around in our markets. I think there's less propensity to act quickly at the moment because there's a bit of uncertainty. I think people understand that there's, the markets.
It's a bit softer.
It's a bit softer. In our markets it is. In some markets around Australia that it's absolutely gun-ho at the moment. It has been all year, but around the Sydney market it's been a bit softer and there's
especially
a bit more choice.
End.
100%. The expensive end's been coming off. The lower end's actually been performing relatively well. But there's increased supply, isn't there? So I think there's, something between 10 and 20% more supply in the market than the 5-year average at the moment. I don't know the exact figure, but I know that there is an increased supply out there. And I think the momentum's sort of started to come out a little bit. And people are sort of realizing that maybe these rate cuts, it's not going to be December, it's not going to be Feb, it's going to be a bit longer. So there's definitely people out there buying property for sure, but it's a little bit slower and there's more supply and probably less demand.
What are you finding with people get pre-approvals? Are you spending a lot of time on pre-approvals that don't settle?
Big time, yeah. We do.
As a percentage of your total business now, is it much greater than it ever has been before?
I don't think it's much greater necessarily. We're always doing pre-approvals because we do work with a lot of real estate agents as our referral partners, and we're always happy to get people pre-approved if they want to be actively looking in the market. But yeah, there's so much of that of getting people approved and them not finding property. And I feel like, unfortunately, I don't know if that's something that we can necessarily get around in our industries, Mark, because if people want to get themselves approved to go and buy a property and you sort of say, oh, we'll come back to them when you find something, you just risk someone else is going to do it.
Yeah. No, you got to do them.
Yeah. You really have to.
But you got to try and it's a bit of a lucky dip, because one of the things about pre-approvals that I've noticed is a year ago, the people who were pre-approving went to auction, but the pre-approval they got wasn't enough to buy the property because the property went much higher.
Yeah.
Now the people getting a pre-approvals going to auction, but they don't buy because they think it's too expensive and they can buy it cheaper. So they actually got a pre-approval, but they think, hang on, I mean, there wasn't many people bidding on that property.
Yeah.
I might pull back, and then the property just sits there for sale.
Yeah.
So do you guys talk to real estate agents? What are the real estate agents saying that you talk to?
I think they're saying that it's much harder to put a transaction together at the moment. I think vendors, if they don't have to sell, are sort of a little bit reluctant to meet the market, and but the buyers, because they have more choice, are a bit slower as you think to sort of go, well, okay, I'm not in a rush. I'll wait for something else. So yeah, from what I'm hearing, there's maybe one or two good buyers on each property. Although, I think there was 50 people at an auction I saw at the weekend or a couple of weekends ago around Clovelly. So I think
that's a bit special though.
Yeah.
Chloe is special. Those sorts of environments, there's only so many houses and they're pretty special environments.
Yeah.
They're outliers, I would have thought.
They are. And I think if they're priced, they guide them pretty low to get a lot of inquiry, and it ended up going pretty high over the guide. But generally, I think there's not, the same buyer pool proportionally to the amount of properties as there was, and things are probably taking a little bit longer to sell. What's
your view that you're telling your clients? We have to wrap, but what's your view you're telling clients or your businesses, Azura Financial? What are you telling your clients relative to where you think rates are going to head next year in 2025?
Well, yeah, it's an interesting one because I think there's so many factors at play at the moment, and I think the markets are currently expecting cut middle of the year, and I think the major banks have basically pushed back their expectations to between Feb and May now. But is there any major reason to cut interest rates, Mark? And we all sort of sit here and say, oh, it'd be great to cut rates. But I think as a borrower and a buyer, I sort of think to myself, well, okay, if they did cut rates, what's that going to do? I'm going to be able to borrow a bit more, but the market's going to run away from me as well.
Yeah, which is what happens here.
Yeah, I don't know if everyone should. I don't know, unless you're in like financial hardship and you need rates to be coming down and you want to get relief, which I'm sure a lot of people do, of course. But as a buyer, wanting rates to come down so I can borrow more to buy, I think you just, there's two sides to that story.
Well, the price just restructures.
Exactly.
It just resets.
Yeah.
And you end up paying the same amount per month because instead of your interest rate's lower, but you borrow more.
Yeah.
Which basically means you're paying the same amount per month. Generally speaking, there's not much in it.
No.
There's a bit of an opportunity that prices don't go up. If you're really clever and you get there whilst there's a bit of supply in the market, like around Christmas time this year, for example, and you find the house that you actually want to buy, but it hasn't sold. And if you somehow manage to exchange and say, look, I'll do a settlement in 4 months' time, and miraculously the Reserve Bank drops the rates in March or something before you settle, then you've probably done well. That's a proper arbitrage, and you're coming out of a stockbroking environment, you know what that means. But that's a rare thing.
Yeah.
So it's really hard arbitrage asset markets like mortgage or lending, property markets. It's one of the hardest things in the world to do. So what would you say to somebody? Last question, but what would you say to somebody, you're experienced in this environment, who's waiting to time the market? What would you say?
I think that's one of the just timing the market in property is very hard. I think property is a long-term investment, and you would have expected the market to come off when they've increased rates from 0.1% up to 4.35 over 2 years, but it came off briefly, and then we've had 21 months of basically increases. So I think timing the market is a really dangerous thing to do because psychologically it's hard to do. And when do you buy? Are you waiting for it to go down? Are you waiting for it to turn? I think you really need to take a long-term view and buy when you're ready, but also understand the dynamics of play here. We've had borrowing capacities come off 30%. We've had interest rates basically go through the roof in a very short period, and the market it has been really resilient. And you got to understand as well that it's not about whether you think the market should go down or not, but the policymakers are incentivized to not let the market go down. So even in the wake of borrowing capacities and rates going up and an inflation crisis, we've also had massive increase in net migration numbers into the country, and that's sort of, I think, propped up the property market to some degree. So you really just don't know how things are going to play out. You might think the market's going to go down and it ends up going the other way, or you might think it's going to go up and it ends up going the other way. But one thing that people can be sure of, and I think maybe you can either agree or disagree with me here, if you take a 10 or 20 year view, and probably a 20-year view is safer, you're probably going to be extremely confident, unless you've bought really the wrong asset, that you're going to be well ahead over the long term. But who knows what happens in between? So you sort of got to cut the noise out. And as long as you can borrow responsibly and take a long-term view and understand the product that you're buying and the areas and the demographics and do your research properly, I think timing the market is lower down the priority than time actually in the market.
I think that's it. I think that's a good summation of, and in other words, buy when you can afford it. Buy when you can afford to make the repayments on the loan that's been pre-approved or approved to you, and buy when you find the property suits you. End of story.
Yeah.
Don't overthink it.
It's harder to find the one that actually suits you than it is to figure out what the timing is. I think,
and try and beat the market, because you'll beat the market over time, but you won't beat the market day one.
Yeah,
that's pretty hard to do.
One little story, Mark, is that I heard a few people just selling when these rates were going up, thinking, I'll buy back in when it's lower. And unfortunately, it went against them. And I mean, who would have thought the market was going to go up in the wake of all these interest rate increases? And that's what can happen. But the psychological, actual, the how detrimental that can be on someone psychologically.
As long as you rebuy when you sell, you're okay. But if you sell and don't rebuy and just stash the money in the bank, then you right now in Australia, particularly here in Sydney, you've lost out.
Yeah, you're battling.
Tom Hawley, nearly called Jangus. Tom Hawley, that's your uncle, your late uncle. Yep. Tom Hawley from Azura Financial. Great to see you, mate.
Good on you. Cheers, Mark. Thanks, mate.